right from masking, distancing, hand washing, using sanitizers, so on and so forth, because we are very clear that it's still not behind us. Now moving on to the numbers, I'm happy to report a strong improvement in our performance in Q3 FY21. Revenue growth of 18% year on year and 17% quarter on quarter. Revenue of 536 crores on the back of improved customer sentiments and demand drivers, as I had mentioned earlier. This is, in fact, the highest quarterly revenue we have clocked in the last 9 quarters since Q2 of FY19. We have recorded 22% growth in EBITDA in Q3 21 of about rupees 39 crores. Margins expanded by 20 basis points to 7.3%. There has been a significant increase in commodity prices, which again most of you must have, are surely aware of, particularly in steel, where the industry is seeing actually almost obscene price increases demanded by the steel mills. However, with better operational leverage and strong results of our Core 90, which I had shared in the last 2 calls, Core 90 is standing for Cost Reduction 90 Days, which is a cost reduction drive across Gabriel. Due to the strong results of this and productivity improvement programs executed throughout the pandemic, we were able to offset part of the increase. PAT came in at 25 crores, up 40% year on year. Moving on to the balance sheet and cash flows, we continue to maintain a robust balance sheet position with a net cash of 283 crores. We have maintained our thrust on collections and continuously working on reducing our inventories. And mind you, we have at no point, put our tier 2 suppliers at any inconvenience, even during the peak of pandemic. Our payments have been on dot all along, and that's the philosophy we follow in Gabriel as well as Anand Group. And as you are aware, we incidentally also are very well known and well regarded for this aspect of ours in terms of supporting tier 2 vendors. So the cash flow generation was to the tune of 204 crores for the 9 months compared to 110 crores in FY20 9 months. So coming to the segment-wise performance, we continue to see solid traction in two-wheeler segment with 20% growth year on year, led by efforts in terms of enhancing market share with key customers, greater efforts in terms of creating new products, and on account of strong recognition of end products in the market. So here, I'm glad to share that while, of course, we keep winning new programs with our existing customers, TVS, Yamaha, Suzuki, that, of course, we are well on track for that. But we have also won the LOI from Ola Electric for their electric two-wheeler, which is again you must have read about Ola Electric's plans of making 2 million vehicles in a place down south, somewhere in near Chennai, in between Chennai and Hosur actually. So we have won that LOI for both the front fork as well as the shock absorber. I'm glad to report a year-on-year as well as a sequential uptick in our PC segment, which is the passenger car segment. As you are aware, our performance was impacted in the last few years due to discontinuation of some of the models that we were on, particularly Maruti, due to the norms changing and Maruti not going ahead with those models like the Maruti Omni. But we have been working hard, and I've been sharing that again on several of my calls, the previous calls, on building a very robust pipeline. Glad to share that is bearing fruition. Espresso, of course, is with us in terms of Maruti. We are also present on the new Alto, and we are working on a new platform, Maruti Jimny, which you are aware, which is in advanced stages of discussion. Plus, in addition, one more platform which is again in advanced stage of discussion. So, some good pipeline here. We are also on a new platform of Volkswagen. We are also one program as a second source, of course, in Tata Motors, where we had not done business for some time, so we are back into Tata Motors. The initial supplies are starting this month. We also won the Peugeot Citroën, which of course the plans have got deferred, but we are there 100% on the Peugeot Citroën as well. In coming to commercial vehicle, where we are the market leader, the good news is the sales have picked up. The M&HCV is really picking up month on month, and there's a really robust demand from all the customers. We are on the Ashok Leyland's Bada Dost, which they launched during the COVID time. We are 100% source of that as well. Aftermarket continues to be a strong story. We generated revenue to the tune of almost 70 crores in Q3, which is 18% up year on year compared to the last comparable quarter. We are successfully leveraging brand Gabriel by launching new product lines. As I had shared last time, we launched the brake pads, which is a very fast-moving item, and the response has been good on that new product. And we are continuously focusing on increasing our penetration in B and C class towns, and also the exports. Yes, exports aftermarket also, while on a small base, but it's showing good improvement. Exports, in terms of overall exports, they continue to show a good traction based on some some programs which we have been working for over the last 2 years. Now the supplies have started. We did share in the last call. So Volkswagen Russia, we are sending 1 container per week. This has been happening for last 2 months now. DAF of Netherlands, we have started regular supplies. And that's only one part. We are working on 2 other products of DAF, which will start in the coming fiscal. So exports have started picking up for us definitely in terms of in OE space. So this led to a robust revenue growth of 140% year on year and 74% Q on Q to 22 crore of exports in Q3FY21. As shared, all OEMs are now focusing on the China Plus One strategy. So they are looking at how to de-risk their strategy and develop some other source other than from the Chinese territory. So we hope to leverage on this and win some more orders, let's say in the next year or 2. To conclude, post the initial disruption due to COVID-19, we have seen a strong V-shaped recovery. We remain cautiously optimistic about the sustainability of the demand. We are striving towards becoming a global top 5 player, which is our vision. We have a 4-pronged approach to achieve this vision. Exports is a key part of this, and yes, we are seeing some traction as I just mentioned. Further, we'll look at domestic dominance in the sectors where we are operating. Commercial vehicle, definitely we are the leader, and in 2-wheelers we are improving our market share continuously. In passenger car, where we had lost out initially, but now, as mentioned, the pipeline is really good and strong. And the fourth, and of course, our pursuit of inorganic growth opportunities continue. We are actively scanning, and we will, of course, make the decision and the choice based on, of course, the best possible option. Lastly, the fourth important enabler is quality and technology. We are India's pioneer in this field, and we are probably the best research and development team that is there in India. I mean, definitely with regard to that in terms of technology. And I'm glad to share that our tech center for 4-wheelers is almost complete, and we should formally inaugurate it sometime in the month of March. The building is complete, the machines have been moved, and in fact the offices are undergoing the final touches. So this should definitely give us some good, give our engineers also a good encouragement and space to experiment and keep coming up with new products and new technologies. So this is, of course, our push, our own little push in terms of being Atmanirbhar, as being promoted by our Honorable Prime Minister. So this is, with regard to the overall quarter that we have seen. Again, in terms of the quarter going forward, I'm keen to listen to your questions, your queries, and I'll be glad to clarify any of those. And on that note, I'll come to the end of my remarks, and I would now hand over to the moderator to start the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Hi, sir. Thanks for the opportunity, and so congrats on good top line growth and relatively decent performance on the PAT front. Sir, my first question is on your margins. So we understand, that we have seen some commodity price increases. So we do have a pass-through clause with the customers, right? So when do you think we'll be able to pass through these cost increases, or do we have to absorb some portion of that?
Arun, thanks for your compliments and observations. We have a pass-through clause. Like I mentioned, pass-through is for almost 80-85% of our total part, because everything is not exactly pass-through. And like I mentioned, some are quarterly, some are 6 monthly, and we also have the odd one which is even yearly. So to that extent, in an increasing market, in increasing commodity market which we are currently seeing, so we are settling currently now from October, so October 2020 onwards, so that is being settled. So there will be some lag, yes, for sure, where we do not have the quarterly settlement. I don't think there will be a loss. It is only if at all there will be some cash loss.
Yeah, but maybe by next quarter, and we should be able to pass on the increases that we have seen in this quarter, or will take maybe a couple of quarters for that?
The next quarter, yes.
Okay. And sir, the other question is on the cost control we talked about, and we sort of laid a bit more emphasis on the cost control initiatives. So is it possible for you to quantify maybe or give some ballpark numbers as to how much efficiencies we have achieved over the past maybe few quarters?
Before I get to that, Arun, while I said quarter, it will be actually the next to next quarter, because we have with many we have a 6 monthly clause. Okay. So wherever it is a quarterly, we will I would say some part of it will get compensated in the quarter of in the Q4, but some may go to Q1 of 21-22. It makes sense. Okay. And efficiencies, yes, we have continuously been working on that. But I think one good simple measure of efficiency, what we do track is the break-even point. So the break-even point has, definitely in terms of the sales percentage, that has reduced from what used to be, let's say 75% or to less than 70%. So that is what we have, 70% of sales. So that is what we continuously focus upon, and the target is to keep on reducing this. So we have, the Core 90 initiative, which where we hope we'll bring it down even further to levels of, let's say, 65%.
Okay. And so on the revenue front, we talked about 20% year-on-year growth in the two-wheeler business, right, this quarter?
Yeah.
But I think the two-wheeler industry per se would have grown a bit more higher. I think the growth was higher on a year-on-year basis.
Yes, because one thing is the growth of Hero has been good. As you know, Hero has really done extremely well in terms of sales, and unfortunately, Hero we are not a source with them. Mm-hmm. That is one of the reasons where there might be a little bit of a difference compared to us versus the market. But
Yeah, and also is it due to three-wheeler being a key supply for three-wheeler as well, and three-wheeler market is down, and
Yes.
that's also.
Yeah, that's right. So just coming to that, three-wheeler, of course, is, there are two segments which have borne the brunt and which have not come back. One is the three-wheelers and second is the buses, and of course, third is the railways. The three segments, if you ask me.
Mm-hmm.
So three-wheelers, is really struggling. But now with the schools reopening, we'll start seeing some movement from this quarter onwards. Buses, with this announcement of the government where they're giving some 18,000 crores towards this, you will see some movement in buses as well. So three-wheelers, yes, has been a huge drop. I mean, the drop has been almost 60%.
Okay. So that's it from my side. I'll join the queue for more questions later. Thank you.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Jeetu Panjabi from EM Capital Advisors. Please go ahead.
Hi, Manoj. Good to see you guys seeing this big turn and seeing all the upsides. So congratulations. I'm glad everybody's fine. A few questions from my side. One, what's your sense of how long this is out? And it's obviously been a spurt. Is your sense this is pent-up demand, or you kind of think this has got longer legs to it and it continues? And also, you kind of think that, if stage one was two-wheelers, stage two is cars, and stage three is probably TVs. So this could go on for a couple of years from here without blinking. So more on the demand side market, I'd love to hear how you think about it.
Yeah, so thanks, Jeetu, and good to hear from you as well. On the sustainability of demand, I think we are quite confident. Yes, pent-up demand drove the initial, let's say Q2 and Q3, maybe to some extent of Q4 also will be that. But if you see the basics, I mean the fundamentals driving the economy, as I said, the rural market, which is the base, is doing very well. And even in terms of future, you see the sowing is good. So I don't see anything going wrong with that. The government, in terms of its infra push, also is, on good signs. So that also is certainly a positive. Even if I discount the pent-up demand factor, clearly there is a move towards personal mobility. So even that would add a bit of sustainability to this demand, at least for 1 year. Maybe things may change after that, but till the vaccinations are completely deployed and the whole country gets covered and the fear also goes away from people, there will definitely be a personal mobility shift. So that should help offset this initial surge of pent-up demand. So all in all, I don't see why next year should not replicate these quarters. So that's broadly my sense. I may be mistaken, but as I said, and in addition, you've seen the budget scrappage policy. Of course, it's early days for any one of us to take a guess because the details are yet to be out. But yeah, again, take a longer term view. At least they have announced it. It's voluntary as of now. It's 20 years for passenger vehicles and 15 years for commercial vehicles. So the direction is right. Certainly I don't see why the demand should go down. Again, and to top it all, you've seen the forecast of 10% plus GDP growth being projected by everybody now, consistently. So Jeetu, I think this demand should sustain.
Okay. No, I completely agree with you. I was just trying to see how you're thinking. My view is that this has got at least 18 months legs to it, and it's a long cycle, and that 10% real is equal to a 16% nominal GDP and a 20% dollar nominal GDP. So if you put that all in perspective, a 20% dollar nominal GDP means your country is growing at over 20% in dollar terms, which is a big one for domestic demand.
Yeah.
On a second question, how are you thinking about what's going to be new and what's going to be different besides normalizing and trying to get this new model and trying to get Jimmy and trying to make sure you get into Besides what is normal for you guys, is there some completely new thinking in terms of what you want to achieve, what products you want to get into? How do you think of business differently?
See, in terms of the vision that we have crafted for ourselves, which is being in the top 5, that itself is, definitely a lot of work to do for us to get there itself, and it really is quite a challenge to get there. Secondly, in terms of different, you clearly charted out what the strategies for getting there towards the vision. I did share the 4-pronged approach. So I don't think anything different, but what within the segments in India, what we are doing is we are trying to focus on the electric, two-wheelers, where adoption is going to be really fast. It's going to be quicker than we think. So that's one focus strategy that we have taken, and ensure that we are engaged with definitely the two-wheeler electric makers. In passenger cars, it's still, we are there on some, but we are not very well entrenched in that space, because even in passenger car the shift will happen, but that will be a little slow. But two-wheelers, certainly that is something different that we are trying to do in terms of focusing on this segment, which is going to change the game.
Okay. And one final question, if I may ask, is the Volkswagen Russia exports. I remember 2 years ago when we were in a factory.
Mr. Punjabi, your audio is breaking. We are not able to hear you clearly.
Yeah.
Okay, is this better? Sorry about that. So 2 years ago in your factory, we talked about, in your office, we talked about Volkswagen for potentially coming with from international factories, orders coming in, and you're seeing that happening. Can this, from what you're seeing and what possibly can happen, could this become a very big part suddenly? Like, can this scale up very suddenly?
Well, Jitu, nothing happens suddenly in auto business. Certainly it takes time. But just to tell you on the, I think when you guys visited, we had done a very small order of Russia. Now that small order has blown into a full-fledged country. We are sending, like I said, 1 container every week. In fact, just last month we got additional 20% volumes. So, if I just connect the dots, yes, it certainly can grow. And if our performance, one leads to another. So if our performance has been good on this Russia, which is so far, touch wood, it's good. I'm sure it will open up opportunities for us where, they might ask us to, can you supply in Europe or wherever with a last mile assembly, whatever, and we are open to that. So all I can say is it's in the right direction.
Okay, excellent, boss. Thank you. All the best. Keep going.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yes, sir. Good afternoon, and congratulations on the resilient performance. Yes, so my question is pertaining to, given going forward, we are the leaders in CV space, and CV cycle is expected to bounce back sharply over the next 2 to 3 years. So is there a possibility that we can, really clock 10% kind of EBITDA margin in the next, say, 2 to 3 years time frame?
Yeah, Shashank, I definitely would think so. Yes, why not? I mean, with all the efforts that we are looking and the volumes going up, we can look at double-digit margins, EBITDA levels, yeah.
So any specific time horizon that you're looking for, or any targets internally?
Well, I mean, all I can say is let's say 3-year timeline should be a good bet.
Okay. And so traditionally, what kind of pent-up margins do we realize in the CV domain, vis-a-vis the two-wheeler or the four-wheeler part?
Shashank, as you know, we don't share the segment-wise margins. But yeah, CV is decent margins, yes.
Right.
So what we are trying to do, Shashank, essentially in CV, since we are dominant in India, we are trying to leverage that to, take our reach globally. And that's where DAF, we had got the Isuzu order, but the Isuzu volumes, unfortunately, did not mature to be very good volumes. We continue to export to them, no issues on that front at all, but their volumes are not so good. So DAF was a very important step for us. So we have just started supplies, and once we see some good success on this, we have another 2 products with DAF coming up, and DAF is part of Pakar Group, so that may open up doors, and we definitely wish to take CV global.
Right. So secondly, since you mentioned as a two-wheeler part, Hero is not a key customer, but now since TVS and Bajaj are reporting better numbers, so can we really outperform the industry going forward, at least for immediate terms, next 3 to 6 months?
Yes, TVS is really doing extremely well. What you said is right. Bajaj is doing very well, especially in the export segment. Honda, where we had kept on winning new orders, and we also got the front fork. Unfortunately, their volumes are a little low, but I'm sure they'll pick up too soon. And with Yamaha, Suzuki, our story remains quite strong, very well embedded. So yeah, certainly we can aim for going ahead of the market, which we had done last year. In fact, in 1920 we had grown better than the market. So in two-wheeler space, we can certainly aim for that.
Yes, sir. Then lastly, our other income has been quite high for last couple of quarters. So is there any one-off, or is it the normal usual run rate that should continue going forward? It has never been so high.
Shashank, I missed a few words. Can you repeat?
Yeah. So the other income that we realized, which was roughly 6 crores for this quarter or 4 crores for last quarter, has never been so high on a quarterly basis. So is there any one-off? So this is a normal new run rate?
Shashank, hi, this is Rishi here. So yes, you're right that there was one-off of some refunds being received from the tax authorities.
So what would that quantum be for Q3 and Q2?
So the extent of 20 odd million.
So sorry, I didn't get the figure.
20 odd million for the quarter.
20 odd million, 2 crores. Okay. And sir,
Sorry?
Yeah. So lastly, sir, towards your vision of being into top 5, any inorganic acquisitions that you have finalized or are progressing ahead, or any color you'd like to share with us?
Like I mentioned, yes, we were looking at something. Then unfortunately, because of COVID, things were kept on the back burner. But yes, we are pursuing, and nothing more that I can share as of now. But yes, our pursuit is definitely on.
Sure, sir. Thank you so much, and wish you all the best.
Thank you, Shashank. Same to you.
Thank you. The next question is from the line of Nikhil from SIMPL. Also, we would request the participants to please limit your questions to 2 per participant. Nikhil, you can go ahead, please.
Yeah, hi. Good afternoon, and congratulations on a very good set of numbers and on the great cost control which you have displayed. Sir, I have 2 questions. One is on the two-wheeler segment. Now, if we look at the two-wheeler market construct between Bajaj and Hero, you've mentioned multiple times in your calls also that market share in Bajaj is limited to a certain percentage. We cannot go beyond that. So, if I have to understand, if we have to increase our market share in the two-wheeler segment, how do you see opportunities evolving for us? Is there more room for us to gain wallet share of the players where we are not present? If you can just help me understand that part.
Yeah. So Nikhil, certainly there is some upside in terms of increasing our share of business even within existing players. Like TVS used to buy from China, which they are now shifted to the source which moved. In fact, it's KYB Japan who set up shop in Chennai in the Yamaha vendor park. So they buy from that. So there is some room which we can certainly look at increasing our share of business within TVS. Certainly, there are some models where we are still presence is low. for whatever reasons, there can be some upside there. In Bajaj, yes, we have told we are kind of capped, but again, you can never. I mean, I'm an optimist, and you can never say how things can change. Even a few percentage points improvement can make a difference there. And then, as I said, we are looking at totally new customers, which is the EV segment. So Ola, we are the single source. Okinawa, we are the source. We are there with Ather, which is, you're seeing a lot of publicity on Ather currently. So we are with them. We are with Ampere. We are with several other electric two-wheelers and three-wheelers. So that's where the upside, will come, because naturally these EV will replace some amount of the normal IC engine scooters. So certainly, with that being well entrenched with them, will give us that upside.
Sir, another question was, like, recently in one of the competitors' call, we understood that Hero was looking to diversify their supplier base. If you don't mind, would you share why were we participating in that business, or we structurally took a call that we don't want to participate because that's a big business which could have taken the scale to a larger level? So I'm just trying to understand what was the reason for not participating, or anything if you can share.
No, I don't think we've even as late as let's say a couple of weeks back, we are engaged with Hero. We have continuously been engaged with Hero. They had thought of, they were going to start the Andhra Pradesh plant, as you would know. So their plans changed. Otherwise, we were in really advanced discussions with them. So there's absolutely no call whatsoever from our end that we can't address. In fact, we are obviously very keen to be part of Hero. Our pursuit continues, and even as late as last week, as I said, we are continuously pursuing with them.
Okay, I have more questions. I'll come back in with you.
Thank you, Nikhil.
Thank you. The next question is from the line of Aditya Makharia from HDFC Mutual Fund. Please go ahead.
Hello.
Yeah, hi, Aditya.
Yeah, hi, sir. Just a question. Do we make monoshock absorbers? The ones which are used maybe in a Bajaj Pulsar and KTM, and do we supply to any customers in India?
Yeah, we do. We do monoshocks. Of course, we do monoshocks, and we supply to Yamaha, Suzuki. We do supply monoshocks. We have the entire range. In fact, the only one that we possibly didn't have was the inverted front fork, which we given to TVS Racing, and Ola Electric. In fact, will be an inverted front fork for the first time in terms of mass supplies. So we are there in every, let's say, every technology, floating piston, monoshocks, gas charge, canister.
Okay. Got it. Thanks so much.
And just since we are on that, we are also working on an electronic suspension for two-wheelers as well. Yes, today it is in the experimental stage. Really cannot, we are a long way away from productionizing, but our efforts continue. We keep tinkering with how we can give better products and how to use technology and electronics to make the ride better. So that innovation goes on.
Right. Got it. Wish you all the best.
Thank you. The next question is from the line of Nihar Shah from Enam Investment and Services. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So, I wanted to ask a question regarding the electric two-wheeler program. So we seem to be present in, all of the models that are getting launched. So can you throw some light on what we've done different from competition, that we seem to have a higher market share in this segment compared to the general two-wheeler business?
It's a good question, Nihar Shah. One is we try. One is they want people. Let's say suppliers who are willing to experiment, develop, and they are looking at literally electronic speed. They work at a speed which is really different. What we are realizing is really totally different from what is there in typical auto industry. probably because they come from an entirely different field, which is much more faster paced. So they need development to be fast. They need prototypes very fast. They need reaction responses to be very quick. I think that's where we make the difference. We are our own technology center. We are able to respond to that very well, and I think overall, the customer approach, customer centricity that I can share at Gabriel, which we have been trying to build and reinforce. Definitely, that makes the difference.
Sure, understand. And
more or less the same. Now, having said that, we are also seeing parallelly as to what can we do better in terms of the product also going forward, which can help the electric, EV makers. So that is an additional initiative that we have taken for ourselves, like like we're doing lightweighting. At least in the passenger car space, where it's very important for IC engine as well to do as much lightweighting as possible. So we have been continuously working with them to do lightweighting. So we are seeing what we can do for the electric two-wheelers specifically with regard to product also, in addition to our response and speed.
Understand. And are you seeing any value addition? Like you mentioned in you're trying to do lightweighting. Are you seeing any value addition in either two-wheeler segment or four-wheeler in terms of shock absorbers or front forks?
Oh, yeah, certainly. In four-wheelers, in terms of, you're talking of value addition
in terms of higher quality of products or,
Oh, yeah. Certainly, we are using higher quality materials. Obviously, we have to look at better strength and reduce the size. So it naturally forces us to look at different aspects of technology. So certainly, yet it adds value in Mahindra and some of the products that we have given for our customers. We have been able to knock off almost 20-30% weight.
Understand. And the last question from my side is on the four-wheeler segment. So, while revenues for this segment have recovered substantially, even compared to last year and this year, we still are substantially lower compared to the peak when we had Omni as part of the business. So is it currently that, only that Maruti volumes are lower in the revenues, or also have we suffered losses in some other customers? And how would the tech center help in addressing the market share which is dipped in this segment?
Yeah. So in terms of the new product pipeline, as I said, we did lose in Maruti mainly due to the change of their product or the obsolescence of the product. It was nothing to do with us as such. The products got discontinued. And certainly we are seeing our positioning within Maruti has certainly improved. We are in their mind space when it comes to suspension. We have won. If you see, we have continuously won new platforms, and all the new platforms that we have launched, let's say from Brezza to Ignis to Espresso to the Suzuki Carry, all those that we launched have been flawless, which is being acknowledged by even the customer. There have been no issues during launch or during post-launch as well. So that really has helped in our positioning with MSIL, and that should definitely get us something going forward. And coming to your second question of tech center, the tech center, it's just not a building, but we have a building with dedicated space for the technology team to try out various things. We are also adding many new machines. We are also going to add in the next year, we'll also add a noise chamber. We'll continuously look at ways and means to give a better product to the customer. So this gives them space, definitely gives them space. Otherwise, they were constrained, very clearly constrained with regard to space. We are also having a full-fledged prototype development lab facility within this new R&D tech center. So, our prototype development capability improves, our time to market improves, our customer satisfaction will certainly go up, eventually the quality is going to improve, which is so very important in our game.
Sure. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Mumuksh Mandlesha from Emkay Global Financial Services. Please go ahead.
Thank you so much for the opportunity. So as you have discussed, the Core 90 program has supported cost reduction. So can you share many major cost line items that have been reduced, sir?
I couldn't hear your question correctly.
Yeah. So as you've discussed, Core 90 program has supported cost reduction. So can you share major cost line items that has been reduced?
So Core 90, was focused around, actually we have taken every element of cost, right from overheads, fixed and variable, to raw material, of course, being the biggest one, to, in fact, productivity, every possible aspect of cost, including, let's say, freight, fuel, power, consumables, and we have seen really a significant reduction in each and every aspect that we have attacked. There has been a very, very good reduction. I can't say, and it's difficult for me to say that this one has gone down. I think everything that we addressed has actually improved in terms of cost levels.
Okay, thank you. Sir, can you share update on the localization, sir? Currently, what is percent of localization and what's the plan, sir?
Yeah, so localization is a very key initiative for us. In fact, that's one of the reasons why I have to share that the Q3 results have been even better. We had a lot of premium freight because there was really a huge steep recovery, and we had to import. We import a lot of stuff from China. So issues around COVID, issues around manpower availability, around ship availability, including the huge lines, waiting lines at the port. So we had several and more challenges on supply chain. So we did incur a good amount of premium freight. So we had already embarked upon an import localization program, and that continues to be a key focus area. We are investing over almost 20 crore rupees to enhance our casting and front fork machining and powder coating facility. So we'll be shifting almost 80,000 front forks, which we otherwise import from China, which will be shifting to completely in-house manufacturing, which offers us, of course, the supply chain benefits, quality improvement, better control, and better cost. So clearly, we want to reduce the imports from China to the minimum possible, so that we reduce this dependency.
So what would be the number currently import, sir, as a percent of sales?
Number, last year we were about, let's say 13-14% imports. That next year, while this year it would be down to about 10%, and next year we're looking at almost reducing it to half.
Okay. Sir, considering the strong budget outlay for railways, so what are the expectations for the railway segment going ahead? And considering this year has been a weak, sir?
Railway has, in fact, been, if I may say, the worst performer in this year. There's a huge drop, and it doesn't seem to be improving. Yes, the tenders have got deferred to next year. So next year, railways have told that there will be an improvement in demand, improvement in their tenders. But I think it will take at least 2 years for the railways to come back to where they were.
Understood. And sir, final question, sir. What is the Capex expected for FY21 and 22, sir?
For FY21-22, it will definitely be more than what we have seen typically. Typically our Capex outlay has been 50 to 60 crores in that range. Next year, while we are yet to finalize our numbers for 21-22, but all I can say is it'll be almost a three-digit number.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Viraj from Securities Investment Management. Also, we would request the participants to limit your questions to one per participant. Viraj,
Yeah, hi. Thanks for the opportunity. I have three specific questions. First is, when it comes to the PV market, we have always shared this ambition where we want to increase our market share more than 5%. Now, given that Tenneco has a very large share with Maruti, and they also are there on the major export models for them, and Hyundai also has their own supplier. So the bulk of the market is catered by two other larger players. So when we say the 5% or more increase in market share over the next couple of years, where is this? Where are we looking this to accrue to us? So that is one. And second is in the terms of premiumization. So if you look at 10 lakh and above models, we don't seem to have much of a play there. So is there a technology models in more premium or higher end models? And if there is, how are we looking to kind of build up our presence there? And last is on the acquisition part, so since the cash is now close to 100 crores, what is our thoughts in terms of acquisition? Will it largely be in India or will it be in exports? And if it's in exports, will the focus primarily be on companies which has some history in terms of profitability and customer access? So what are the parameters we're looking when it's say we're looking to acquire? Thank you.
So in terms of PV market share, certainly, there's, as you yourself pointed out, there's a definite good upside in terms of growing within Maruti Suzuki. Like I mentioned, we have been delivering them flawless program after program, which is held us in good stead. Even on the relationship, we are doing very well. Even on let's say in their supplier forum, there have been several events where Gabriel has been asked to present as a benchmark to the entire forum. So all I can say is, we have some businesses in advanced stages, so I can definitely see a very good upside. Like I said, in two-wheelers in Bajaj, maybe that upside is difficult. But in Maruti, there is absolutely no restriction whatsoever. So I can, why 5%? I can increase by 10% or 20% as well in Maruti. So we are very, very hopeful about that. And in addition, in terms of Hyundai, yes, it is, as you know, our own group company, Mando, which is supplying to them. But we do supply piston rods to Mando, and we are trying to see how we can increase that supply. So at least we still remain a part of of that Hyundai Kia supply chain by being tier 2. That is what we have decided, and we are pursuing. In terms of new cars coming up, PSA, we already won the business, so that is one good addition. In terms of increasing market share, Tata Motors, where we were not supplying after the Safari went out of production and the Nano went out of production, we are now got an re-entry back in Tata Motors. So even there, we stand to add to our market share. So certainly all these put together, I don't see why we cannot grow even beyond 5% market share improvement in passenger car. Yeah, it cannot happen tomorrow, but certainly I think the foundation blocks are in place. And your second point about premiumization, we were in Toyota Corolla. Unfortunately, they discontinued the model. We are working on the Fortuner with Toyota. It's in advanced stages of discussion. In other models, let's say in Honda, the volumes are so small. We had almost won the Civic, but then again Civic they decided not to pursue. There are some reasons why we are not there in the 10 lakh plus. And about 20 lakh segment anyway, the customers also import the shock absorbers because the volumes are too low for them to localize. So that's about premiumization in passenger car. Yes, certainly your point is well taken, that can we look at something more and can we look at improving it further? Yes, certainly that's something I take from your point. And yes, we can do something more, certainly. Your third point on M&A, we Right now, as I said, I can only tell you that we are looking actively at some opportunities. I really can't comment whether they are in domestic space or overseas. But let's say in the next call, we may be able to update you the status in a better fashion, hopefully. So thanks, Viraj.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So over the years, we have seen that our channel mix have largely remained same. So, maybe OEM contributing around 80 to 85%, and maybe replacement and export market at around 15-17%. So what is your long-term guidance for the replacement market as well as export? I have seen that, export this quarter have done very well. But what is your long-term guidance for, other two channels, which is export and aftermarket?
The vision that we had was, have this both put together as 25%. So what you're saying rightly, it is, give or take 15%. Our target was to do it 25% within aftermarket and exports, and I would say that remains so. Exports did take some time to take off, but now you're seeing some early improvements. Aftermarket is moving strongly. Both domestic as well as exports. So yeah, I think we can look at improving that percentage to let's say 20 plus at least.
Okay, so can we expect a double-digit kind of a growth in coming years in both these two segments?
Yeah, why not?
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Sir, my only question, I have one question. Basically, it's regarding our ambition of being the global play among the top 5 global player. If you have to understand the challenges in order to achieve this, would you say technology is a bigger challenge, or would you say it's more of a time period which is required to build the relation and grow it? So I'm just trying to understand that how are we placed on technology if technology is a barrier to gain market share globally?
Yeah, technology obviously is certainly very, very important. That's why, as I said, we decided to spend on this tech center along with a lot of new equipment. We'll also have a small test track around the tech center where we can do a small and quick and dirty testing as well. So tech center definitely is a very key move in that direction to improve the technology offering to the customer. Again, if I break it down in terms of being the top 5, break it down within segments, passenger, so commercial vehicle and two-wheelers, we definitely can, in terms of numbers, even today we may be in the top 5. That's very likely. In terms of passenger car, the gap is big. For that, technology as well as relationships, customer accounts, both of these are important. So we need to work on both. So passenger car, there's a big gap. But the other two segments, certainly, I would say we are already in the top 5.
Hello.
Yeah.
So in order to fill this gap in PV, would you say that probably because, as I understand, like filling this gap in PV and coming to top 5 in PV might be a more time-drawn process. So
Yes.
would you say that might be substituted by a better growth in exports, because our export share as compared to the global market is still very small. So how do you see that market share increasing? Because you've mentioned in previous calls that with DAF and with VW Russia and there was this Colombia product, once these start happening, the export growth could be significantly higher. So how are you seeing the product scale up or the new RFQs coming up for you?
So they are moving well. As I said, they've been moving quite well. But in terms of passenger car, yes, we have got this Volkswagen order, but I think if we have that global ambition which we have, we certainly have to look at improving technology and getting a good customer account. Exports, yes, exports is the way, no question about it. Exports is the way to get there.
Okay. Thanks a lot.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yes. So in the opening remarks, you mentioned about being eligible for Ola Electric. So are we going to be the sole suppliers for that, or how is the pecking order placed?
Yeah, I mean, that is the understanding that we have. We are the sole suppliers.
Okay. And second, sir, you mentioned about a big three-digit Capex next year. So that will amount to exactly what? Can you share some color on that?
I mean, what I mean is big three-digit. I mean, we might just move into a three-digit number. Normally we are at 50, 60. Next year it will be more like 90 to 100. Because as I mentioned, 20 crore we are putting up in backward integration. We are putting up this facility, a furnace and a machining setup for machining and processing our front forks, which we import from China. So that is one part. The other investments, I mean, in terms of directionally, it's mainly automation. We are focusing a lot on automation. We have, as you know, we have already have almost 30 plus robots in all our plants put together. We are doing automation so that finally the productivity and the people cost keeps coming down over the years. So that is the second direction. And the third direction is technology. So import substitution, automation, and technology. These would be the three broad directions where we are going to invest going forward.
Thank you. The next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, most of my questions have been answered. I just had one follow-up on acquisition. The focus would largely be on existing product category, right?
Yes.
And the point you said on the technology gap being there in PV. So would that be one of the sole driver when we kind of looking to bid and go for an acquisition abroad?
It is one of the drivers, yeah.
Okay, thank you.
Thank you. Due to time constraints, that was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you all for really very interesting questions, and some of which we definitely have to work upon, and gives us some food for thought, and also how to improve our own performance going forward. So thanks once again sincerely for that. Hope we were able to answer most of the questions. Like I said, we are looking at really strong recovery. Things could have been even better, if we had forecasted this recovery. But I mean, none of us could. It's not only, let's say, Gabriel. In fact, the industry could not forecast this kind of a really almost a miraculous recovery that happened starting from September actually. And like we said, we see this sustaining going forward definitely in the next year or even longer, as long as the government is stable, which it is, and it continues on a growth-oriented policies. We don't see any big impediment to this. We just hope and pray that there is no second wave or resurgence of any mutated variant or something. That is the only gift that we have as of now. Otherwise, it looks good, and we hope to make the most of it going forward. So thank you once again, and wish you all a very, very happy, healthy, and safe New Year. We are already in the second month, but nevertheless, I really hope that we move into a much better year, and we try to erase the memory of 2020 altogether. So thank you once again. Thanks for your support, and thanks for your patience.
Thank you. On behalf of Gabriel India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.